Hi, everyone. Welcome to another episode of the AI Spy. If you caught our last episode, we had the CEO of Security Everywhere, Francis West. We were talking about the cybersecurity trends, some very interesting topics there around Friday fraud or conveyance fraud, and some of the trends that Francis and his team see in the UK. Do catch up that episode and the Cybersecurity Month specials with Dan Fernandez. Dan talks about doxing and the AI-fueled cyber attacks that he's seeing. So today I'm talking to one of my favorite persons. I love to read and follow everything that he posts. A lot of what I've learned is by reading the white papers that he's published. I'm so happy. I'm so really excited to have Ken Palla join me today on the AI Spy. So Ken, welcome.
Thank you very much. Great to be here, Anurag.
And so I tapped in Ken. One, it's because it's International Fraud Awareness Week, but also timed very perfectly is the recent white paper that Ken authored and released, focused on the Australian scam prevention efforts. So we're going to talk about the probably one of the most progressive scam prevention frameworks globally, which is Australia's SPF. We'll unpack what that framework looks like, how it compares to other models. But Ken, one of the things that I do on the podcast is start with the origin story. So I want to talk to you about how did you get into fraud prevention? You've had a very long career in fraud prevention, but how did you get into fraud prevention?
It started back in 2005 when we started to see some of the problems in online banking and some of the stories being written about fraud and customers losing money. And so I was asked at Union Bank, I was at Union Bank at the time, and I was asked to research what I could find out about what was going on about online fraud. And so I went to a number of the places like Gartner. I have a good friend, Aviva Lighton, there, and started to find out what they were writing. And so basically started learning about it, and that became the beginning of it, because prior to that, I'd spent most of my time in mortgage banking, putting in applications around mortgage banking. So doing this research on online security in 2005 got me into it. And then we realized that we had to add some new capabilities, and we were making some changes. And so that was really the beginning of it, was because of the research. And then I moved into it. And then while I was at Union Bank from 2005 to 2019, in effect, I basically managed online security for both our commercial customers and retail customers. So I was looking at, what were the issues, what security did we have, what were the gaps? And of course, back then there were a lot of gaps, but the fraud wasn't as severe as it was today. So slowly, year by year, where we had gaps, we added controls. And so that's pretty much what I did, was identify the gaps, identify solutions, implement the solutions over that period from 2005 to 2019. And because I was doing it for both the retail customers and commercial customers, I got a really good exposure of what needed to be done for both customers, because the problems are different. But in many cases, the problems are similar. So being responsible for both sides, I was able to offer solutions that were solving problems on both the retail and commercial user base in the online world. So that's how I began. And even now I'm retired. I retired in 2019, and I spend about 30% of my time in online security. And a lot of it is, as you mentioned, writing white papers and blogs for various vendors who are interested in thought knowledge on what's happening in online security. So I write independent blogs and papers talking about what's going on. And you're right, Australia was one of the recent ones I did, and I know we'll talk more about that later.
Yeah, so I on my browser I have a folder called Ken Palla, and I have tagged all your it's the bookmarks to all your white papers. So there's some of them that I keep going back to. It's hard to remember all of them, so I almost have it, and then I go back to them and refer what you wrote. So it's amazing the work that you do, the time and the detail that you put into those white papers. I was going to I'll add the links to some of the ones that I find most useful. The one you authored around customer vulnerability, the customer vulnerability framework that the FCA had proposed, and how large portion of UK's population actually is vulnerable to scams, and leading that up. And I'll also tag the one that we're going to talk about today. So Ken, you mentioned you started in 2005. You continue to focus on fraud prevention. So what is that one significant change that you've seen in fraud prevention over the years? What have you seen? I mean, there's been the fusion of cyber and fraud prevention. There's people talk about FRAML. If you had to pick one significant change in either the prevention or the attacks.
Yeah, I mean, I think the biggest thing is the attacks changing from going to the bank platform to the customer. So we talk about scams, and I guess if we were to put some definitions here, we've got fraud and scam. When I think of fraud, I think of that as being an account takeover. So it's an unauthorized transaction being done by the fraudster. That's fraud, and that's most of what we saw from 2005 maybe to 2016, 17. And then we started to move into the scam side, which is the authorized transaction. And this is where the fraudster is getting the customer to initiate the transaction under some level of misstatement, of duress, whatever it might happen to be. And so the scams are really the big part of what we see today. And so when we talk about the losses, if you just take the United States as an example, you've got the FTC, you have the FBI with the IC3. They talk about 10 to 13 billion dollars in losses around scams. Now, this can relate on the commercial side to business email compromise. It can also relate on the consumer side for romance scams, investment scams, or a combination of romance scams and investment scams that we call pig butchering. And so that's 10 to 13 billion. But we also know that many people don't report these scams because they're embarrassed. So you might take that, 10 to 13 billion dollar number, and maybe it's 100 to 200 billion dollars in the United States alone. NASA, which is one of the international groups involved in scam prevention, recently came out and said maybe it's $1 trillion per year around the world. Now, whether it's that high or not, I don't know. But clearly, if you look at the U.S. and say there's $100 billion in scam losses, that's far greater than what banks took in losses around regular fraud, account takeover losses. So scams is the big thing, and the fraudsters are getting really, really good at it. And they're basically successful getting money from people who run every walk of life, young, old, not so smart, maybe smart, college professors, tech CEOs or tech executives in Silicon Valley. So it's proving to be very, very effective. And that to me is absolutely the biggest change that I've seen.
Okay, great. So you mentioned scams, and I think in the last few years we've seen clearly the shift of fraud losses in scams outpacing the ones on unauthorized fraud or account takeover. So definitely, I think that's a clear change in tactics, that attacking the customers, the human rather than the system. So rather than yeah. Great. Are there any specific scam tactics that you saw in 2024 that were, I mean, romance scams? We see that, but were there specific tactics that you saw where you were like, "Wow, that's new," or "That's emerging"?
Well, the new part is AI and Gen AI. So obviously, we go back to just going back to 2022. I remember November 2022. I started to see some stuff on Twitter talking about ChatGPT and this new cool AI thing. And back then we always heard a lot about AI, and it tended to be overhyped. And all of a sudden, this thing, it just kept popping and popping and popping. So that's when ChatGPT or Gen AI really came alive, and it's kind of a new generation. And so we started to think about the benefits for, the banks as to how they could use it, but the fraudsters have also grabbed it. So what we see in 2024 is we see that voice can be cloned. So if you've given a speech and someone just has 20, 30 seconds or less of your voice, they can clone that and make it sound like Ken or Anurag. The same thing with video. You can take a picture. If you can grab a picture from somebody, you can turn that picture into a talking video. So we're seeing those kinds of clones. We've seen a couple examples in business email compromise where there's been a webinar that people thought it was people in the company and a senior executive telling somebody to send money out, and they've done that. You can see it with grandparent scams where you can get a voice recording of somebody and call up a grandparent, and it sounds exactly like their grandchild saying, "I'm stuck and there's some serious problem, a car accident, drinking, drugs, and money can help get them out of this problem." So that's probably the newest thing that's going on. But the thing to realize is that the normal tactics the fraudsters have used for these scams of romance scams and investment scams still continue. The Gen AI just makes it more convincing, and that's probably what we're seeing to some degree this year, but just the effectiveness they have. And the other thing to realize is that with these scams, you tend to think of, oh, it's one or two Nigerians doing these types of things. But today, There are actually, as reported by the UN, hundreds of thousands of people have been in effect kidnapped in Asia, thinking they're going to Cambodia or Thailand for a new exciting job. And when they get there, their passports are taken away and they're basically locked into these large compounds in Cambodia with, big walls, a concertina wire around the wall, armed guards, and they're then forced to initiate the scams on behalf of the scammers. So it's really a transnational organized crime activity that drives a lot of these scams against consumers. And that's what also makes it very significant today. It's a very, very big deal.
Yeah, I agree. I think that the UNODC report that came out that talks about the scam compounds. I'll never miss an opportunity to plug one of my episodes. So we did an episode with Mina Chang at Humanity Research Group. They've done some great work in following up with the victims in that Southeast Asia region who have been scammed into working in these scam compounds. So I'll also encourage listeners to go listen to that episode and follow Mina. Their group is doing some great work in the region, trying to rescue people out of these compounds, trying to work with governments to improve safety and provisions for people in these compounds, or even break some of the compounds. It was eye-opening when she said there are special economic zones have been leased by people and that they are being used as scam compounds. So absolutely, yeah, the rise of scam compounds is scary. So talking about scams, there are many approaches to how scams can be prevented. The two prevailing popular models seem to be the UK PSR scam model and then the Australian scam prevention framework. So let's talk about the Australian scam prevention first. So can you explain for the listeners on a very high level what the provisions are and how Australia is approaching the scam prevention problem?
Okay. So Australia, they call their scam prevention thing the Scam Prevention Framework, or SPF. And basically this began almost about a year ago. So this is November of 2024. In November of 2023, the Australian government came out with a consultancy and they said, we're looking to add controls for scams, and we want to involve banks and telcos and digital platforms. So Australia is first to want to incorporate a scam control solution involving not just banks, but digital platforms, so the Metas, Matchbooks, Match.com, things of that sort, and telcos. So they had an initial consultancy, and then they came out with another consultancy just in August of this year, adding more detail to it. And in fact, just this week, yesterday, they presented legislation to the Australian Parliament to get this approved, and they hope to have it approved by the end of the year. So this is all moving at a very fast pace. So within 12 months, they said, hey, we have this concept, to where they hope to have it actually approved by the Australian Parliament. And so what they're doing is rather interesting, is they have this framework, and they are saying, we heard what's happened in the UK. We don't quite want to do that, but we do want to be able to address reimbursement for customers. But quite frankly, the Australian plan is more about prevention first. They want to stop the scams from occurring. And so they're basically looking for the digital platforms to be proactive and take down bogus investment sites, take down fraudulent activity or scam type activity that's occurring on the digital platforms. And the same in the telco space. They want the telcos to be able to try and block SMS messages that are the start of these scams. Because we know from studies done in the UK, probably, let's say 65 to 85% of these scams start because of a text message that comes out or because of something that happens on the digital platform. And so that's why they're involving the digital platforms and the telco, because that's where a lot of these scams start. They end, if you will, in the bank, where the customer is sending money through the bank to the fraudster or the scammer. So that's what's there. And what they're going to do is they're going to basically say, here's a number of regulations you have to do. And as long as those three entities, the banks, the telcos, and the digital platforms, as long as you have added to your controls the regulations that we've defined, then you're not going to be liable for the reimbursement for the customer. And again, they're making that very strong because they want prevention. They don't want the scams to occur, and that's where their focus is. But what they're saying is that if you don't follow the regulations, and there'll also be specific codes relating to banks, telcos, and the digital platforms, if you don't follow those, then if a customer does suffer a loss, the loss will be shared by the entities that were involved in the particular loss. Now, so that's kind of the framework at a high level. One of the challenges will be is have these entities complied with the regulation and the specific codes that will subsequently come out as to what they need to do. And so there's going to be an ombudsman in Australia that will be responsible for receiving the complaints from the customer if they take a loss, and then the ombudsman will have to decide if the bank and the associated telco or digital platform that was somehow associated with the fraud, did they meet the guidelines and the regulations that the scam prevention has, the SPF. And so that will be a little bit tricky to really figure that out. But if they find out that the entities have not fully complied, then there would be a level of reimbursement for the customer. Now, that's very different from what's happening in the UK. In the UK, it's set up where effective this month on October 7th, the banks were mandated to reimburse for scams, and it's done on a 50-50 basis between the sending and the receiving bank. And there's no question of, well, did the bank have the proper controls in place or not? It's if there was the scam loss, you go to the sending bank and they will reimburse and get 50% back from the receiving bank. Now, at the same time, the regulators in the UK, there's the Payment Systems Regulator, the PSR, and the FCA, the Financial Conduct Authority. They have defined controls that they want the banks to have. And there are specific controls about preventing the scams, specific controls about adding money mule management. And so they have controls in there that they want the banks to have, and they're going to measure them as to whether they have those controls. But apart from that, the sending bank has to initiate the reimbursement to the customer if the scam occurs, period. Now, there are limits. It goes up to £85,000. And again, it's split between the sending and the receiving bank. There's also an ombudsman, the Financial Ombudsman Service in the UK is a place a customer can go if they're not satisfied. And if you go to the Financial Ombudsman Service, there the reimbursement could be up to £430,000. Now, there is some confusion still that if the bank doesn't offer enough or the customer's not satisfied and they go to the Financial Ombudsman Service and the Financial Ombudsman Service says there has to be a reimbursement, it's not clear if the Financial Ombudsman Service's reimbursement is still split 50-50 or there's some hybrid of how that is split. But that's the big difference there. So in the UK, it's a mandatory reimbursement, irregardless of the controls you have in place. In Australia, when this comes into effect, which will probably be sometime next year, the issue is all about the controls. Are the controls proper? And only if they're not, there will be reimbursement. Let me pause because you might have some questions about all of that.
No, so thanks. That was very detailed. If we look at the numbers that are coming out of Australia, they have some of the lowest scam numbers compared to the UK or the US. So that's great. I think the way to interpret this and the challenge that I see in the two models, at least from my perspective, I think the UK is more customer forward. They are saying just reimburse the customer. We want to protect the UK citizens, while the intent is the same in Australia. They want to protect Australian citizens, but they want the banks to do more and not just blindly reimburse every single claim. Is that also how you see it?
And I think in both Australia and the UK, there's the issue of gross negligence. So if the customer has truly been grossly negligent, that will be factored in. There's also the concern about first-party fraud. So that's one of the big concerns that people have about the UK model is will it create more first-party fraud where the customer themselves is involved in fraudulently claiming that something happened. And so that's always a concern, and that's something that's going to be watched very closely. And so I think banks are going to be cautious about that and watching for first-party fraud. The reality is we're seeing more first-party fraud today. If you look at e-commerce, more and more the consumers are getting into some of these deals with people who give them bad advice or tell them how you can basically claim you never got the TV but still get your money back. Or do these return types of things. So what we see in e-commerce is much more first-party fraud going on, which means consumers are more willing, or customers, humans, are more willing to say, oh, this isn't a problem. Maybe I can get some money from my bank. So first-party fraud is definitely a very big deal. I don't want to minimize that. And that's a concern when you start doing reimbursements That's a concern you have to look at. Now, another thing that's interesting in Australia, although the SPF, the Scam Prevention Framework, is not in law yet and won't be in law until next year, the telcos and the digital platforms and the banks are already getting together. And there's a form of a fusion center in Australia. I think it's the National Anti-Scam Group or whatever. And so it's a centralized government entity that's working with these three private entities to already start to do things. So we're seeing investment scam websites being taken down. We're seeing telco entities being fined because they're letting scam messages get through. And so already we're seeing the benefits. In Australia, the Australian Bankers Association a year ago introduced the Scam Safe Accords, where they said, as Australian banks and credit unions, we will add these controls. So before the government even defined the controls to be added, the Australian Bankers Association is adding controls. And a big one is confirmation of payee. So they've
Right.
committed to a very expensive investment there. So you're already seeing it now. My point about that is if you sit back and say, okay, well, what's really happening in Australia and UK? And basically, it's the government regulators are coming in with a form of a big stick of saying, look, we are going to have significant fines and there's going to be penalties. And so as a result, you're seeing changes. You're seeing the banks add controls. You're seeing, at least in Australia, the digital platforms and telcos are taking this seriously. You saw recently where Google made an announcement with GASA, which I think I mentioned is one of the international groups to try to help prevent scams. And they've announced a program, kind of a digital program, to help identify scam signals.
Yeah.
And Meta has come up with something. So I think we're seeing digital platforms and also the telcos taking more interest in preventing the scams, but it's being done because there's government regulation and a big stick behind it. We're also seeing some of this in Singapore, which is another aggressive country trying to prevent scams, where they recently announced a program that was going to be, it involved phishing. But if they saw the phishing was involving a telco and a bank and a customer lost money, that there was going to be a waterfall effect there that has the telco and the bank added the proper controls. And if not, and there's a loss, there could be a split between the telco and the bank. And so that's in Singapore. So again, it's when the government is getting serious and threatening fines of a significant magnitude that we're starting to see changes take effect. We're seeing controls come in. And even in Australia, they're starting to see a drop in the scam losses already.
Yeah.
So government intervention in this case is proving to be beneficial to the consumer in seeing controls come in and maybe scams actually being reduced.
Right. So those are three great examples, right? So the UK and Australia have more mature programs. Singapore is, I think they had the consultation opened, which is, I think the consultation has been closed now. They're moving on to drafting the final. I forget the name. It has a very interesting online code of conduct or something like that. Again, we'll link that. But the Singapore model is a mix of, I feel like it sits nicely in between what Australia is doing and the UK is doing. It does have shared liability between receiving sending banks. It does have reimbursement, but it also has the cross-sector collaboration, which Australia does so well. Now there are other geographies like Canada. Canada is reviewing. They had the consultation open. I think the consultation just got closed last month. US, we don't have anything. There are some proposed regulations, which I don't think, my personal opinion, will get adopted soon. But there are other geographies which will move into and adopt. So where do you see, or is it based on geography, which way do you think they will lead? More towards the Australia model or towards the UK model?
Oh, clearly the Australian model. No doubt about it. I mean, I don't think anyone wants to, from the banks, the telcos, the internet platforms, whatever, the interest I don't see as to what happens in the UK. I think what the UK is doing is going to stay there. But it does generate that, in essence, we don't want to do what the UK is doing, so we better do something.
Right.
From that perspective, what the UK is doing has a major influence on what the other countries do, but it doesn't mean that they'll follow them. Another good example, you mentioned Canada briefly. So Canada did have a consultancy. It was a very lightweight consultancy where they just asked 7 or 8 questions. Are Canadian banks doing enough for fraud and scams? Should there be more reimbursement? Should there be a slowdown or stopping of payments to help prevent scams? Questions like that. And so actually I have a white paper on that coming out again, not again, but coming out in the next couple of weeks. And so we'll talk about what does that mean in Canada. And what's interesting there is you had the Canadian consultancy and you also had the Canadian Bankers Association provide a detailed response to it. And there's also an ombudsman group in Canada, and they provided a response to it. The ombudsman group in Canada is called the OBSI. And effective November 1, the OBSI was responsible for all complaint resolution for all banks and investment organizations in Canada for the first time. Prior to November 1, there were a couple of different ombudsman type groups, but as of November 1, it's all one group, the OBSI. And so I think there, in concept, they want to follow what Australia is doing. They don't want mandatory reimbursement. But what's interesting in Canada is there really are not any federal laws about online security and online reimbursement, even for unauthorized transactions. And so there they tend to follow what they call the debit card code, which is a code I believe put out by the Canadian Bankers Association, and banks are kind of following that. So it's kind of interesting. But what you also have, another interesting thing that came about just last month in the province of Quebec, there's a proposed law coming out about reimbursement for online security or online losses. And it's not quite clear yet whether that could follow what's happening in the UK or be more of just a general statement about unauthorized transactions and a little more of a definitive statement about what the reimbursement policy should be. So a more of a formalized law, which, like I say, doesn't exist at the federal or the province level in Canada. So there is actually a lot going on in Canada right now. And the white paper I have coming out in probably a week or two will provide a good summary of that. But I think they're very interested in what Australia is doing. So I think Australia will be the example that people will follow. And again, I highlight the fact that Australia has pulled in both the telcos and the digital platforms because that's important. And we do see in the UK, there's an Online Safety Act, which does have some requirements for the digital platforms to do things to prevent scams and fraud. And that's come into effect. And the initial thrust that's being pushed onto that is looking at the danger to children on the internet. And so that's where the government's initially putting focus on, but soon they'll focus on the issues of fraud and scams affecting, adults, if you will. But it's regulation that I think will get this changed. Now, here in the United States, you're right, there's not much that's been happening, but there is an entity called the Aspen Institute that has pulled together some banks, telcos, and digital platforms to talk about the issue of fraud and scams. That's just begun. They have a meeting that's going to come up very soon, I think in Washington, D.C., and we'll see what that does. But again, there's no regulatory stick to that, so I don't know how effective that will be because everybody knows what they need to do. Banks know they need to have scam controls. Banks know they need to have money mule management controls. They know that.
Yeah.
But it's not a requirement in the U.S. and it's not a requirement in other countries.
I was
The
going to.
telcos know what they need to do. Digital channels know what they need to do. So everybody knows what they need to do. They just have to have the will or the desire to do it. And that's currently the weakness I see is the will is not strong enough in those three entities until lo and behold, the governments come in and say, if you don't do it, then the fines could be significant fines.
Right. You mentioned something, and that was going to be my last question around money mules. I know you're a strong advocate for proactive money mule management, money mule detection. Yes. How important is money mule detection to scam prevention?
It's incredibly important. It's why the scams can occur. You're getting the customers to send money to another bank account typically. Now, sometimes you're sending it to crypto, but very often it's going to another bank account. So if the banks don't have sound money mule management, there are so many accounts can be opened up. And what it comes down to is several things. It's weak online account opening. So it's very easy to open up accounts. And then once they're opened up, they become money mule accounts. But we're also seeing, again, as part of consumers willing to participate in fraud, we're seeing consumers willing to make their accounts available to fraudsters to allow money to come in. Yeah. And also some people who are victims of romance scams, because of their involvement in the romance scam, they're willing to let their accounts be used for money mules, for these scams to come in. So the romance scam victims, in effect, become complicit in the
Right.
crime of scams. But money mule management is incredibly important to stopping the scams and fraud. That's why I'm such a strong proponent. And I'll get up on my soapbox. I wish the Consumer Financial Protection Bureau in the United States or the FFIEC would come out with an online guidance saying banks and credit unions and fintechs have to have scam controls and money mule management. It would be a one-page letter, but that would do more because then it would provide the business case logic for banks and credit unions to say, oh, we have to do this now. So then you get the money to add those controls. That would be my one Christmas wish. And I know
So,
we're about to change our political leadership in the United States. And so before the Democrats leave, that could be a Christmas script. But don't make it too prescriptive, but just make it as a requirement, similar to what the FFIEC guidance has been. If you look in 2005, 2011, those were some of the best guidances the FFIEC put out.
right. So, I wanted to wrap up on that question. I'm going to ask all my previous guests about one wish for Santa, if you could, around fraud prevention. You already told yours, so I'm not going to ask that to you again. But yes, I agree, and I think money mule prevention, money mule detection or prevention would be very critical.
What I want to add is that when you talk about you should have, scam controls and money mule management, there are solutions out there now. So there are vendors who are coming up with
Yes.
good approaches of monitoring the inbound traffic for money mules and looking at behavior. So when I talk about that these things should be what banks and credit unions should be doing, there are controls out there. And I actually have another white paper coming out called Innovations in Scam Control. There are solutions to these problems. It's not just like, oh my God, what am I going to do? And
Right.
again, because of what's happened in the UK, we've seen a lot of the banks have had the need for controls, and a lot of vendors have come up with some very interesting solutions. So there are ways to address this in a meaningful way.
Ken, thank you. Thank you for joining today, sharing all your views. We are coming up on time. I enjoy every conversation. Last year when we spoke, I think it was just for I think I budgeted time for 15 minutes. We ended up talking closer to an hour. So always great talking to you. And thanks really for writing the white paper and sharing your knowledge with us and the listeners. Any last things you want to leave with?
Well, Anurag, thank you for inviting me. I guess I'd leave it where I feel more optimistic because I do see solutions and capabilities. I see things changing, but it takes a real commitment. I think it takes a real commitment at the bank executive level to understand how severe the scam problem is and how much bank customers are losing money. In many cases, their life savings, their investments. And so we really have to address this. And I think bank executives need to step in and acknowledge that this is a big problem. And there's more banks can do. Even though we all say the telcos and digital platforms need to do something, there's still more the banks can do. In education awareness, when someone wants to take that $40,000 cash withdrawal out, have you trained your staff on the psychology of how this person basically is somewhat brainwashed or their heads wrapped around the axle? People have different ways of describing it, but they really are so preconditioned to move that money. You need to understand that as the bank employee when you're dealing with it, it's not just a rational person you're dealing with. And so that's what I hope. But it's such a severe situation right now. And I think the bank executives need to really be aware of it and lead the charge.
I totally agree. Ken, thank you again. Thanks for joining today. I had a great time listening to you, learning from you, and I hope so all the listeners do. So everyone, that's a wrap on this episode, and we thank Ken for taking time out, and I hope you find this episode interesting. We'll be back again with another episode with another A-lister. We're coming towards the end of the year. We usually take a break after Thanksgiving, so maybe this is the last but one episode. We'll have one more episode and we'll call it a wrap for the year. We'll be back again in 2025. I'll see you on my next episode. Until then, thank you and goodbye.